Hello and welcome to the weekly wrap-up, where each week a member of the Dukascopy TV team asks a financial expert for their take on what's been moving and shaking the money markets. I'm Monica Gibson and Charles Purdy is joining me on the line to share his insights today. Charles, first of all, it may not have been the most eventful week on the economic calendar, with Thanksgiving holiday interrupting trading. But Carney's housing alarm bell appeared to nudge the Bank of England towards stimulus exit, and in contrast, the week being rounded off with a credit downgrading in the Netherlands. Now, admittedly, grading importance seems to be diminishing, but all things considered, how would you describe market sentiment at the moment?
I think sentiment at the moment is reasonably positive. Certainly here in the UK, economic data has been exceeding expectations over the last few months, and so we've seen sterling appreciate against most currencies since the start of August, and it's had a few blips along the way, but certainly sentiment is very sterling positive. As you say, there's very little data released this week. We did have the third quarter second estimate for the GDP figures, but they came in as expected. I think what Carney has recognised is the UK economy is moving forward. House prices are getting out of kilter. There's a worry that there is a sort of a bubble beginning to appear. But again, the government has been very successful in trying to encourage more exports out of the UK. So I think what he's done is try to dampen the housing market, but make more funds available to companies so that the banking system can help then if those companies expand and export more. Well, I was going to say about this in Europe, I think it's a different picture. Clearly Germany is still the main powerhouse, but it doesn't surprise me that the Netherlands has had a downgrade and that there's still, I think, some significant problems in other states other than Germany with their government and bank debts as well.
So news of the German Grand Coalition gave impetus to the resilience of the euro. But do you think it will have a lasting effect on the single currency, as well as confidence in the bloc, in terms of progression towards the banking union?
Well, Germany is a key part of the eurozone. It's a huge exporter, it's a huge industrial power, and having certainty in who's going to run the country is obviously a great help, because they need to be able to help other member states with the free cash flow that they're generating. Clearly, they're not going to just bail out other states for the sake of it. So I think it is a very important part in maintaining stability within the eurozone and adding support to the euro. I think it's going to be very interesting to see how we do now progress with the banking union. It's not going to be straightforward because there's obviously 17 different nations having to have their input and their say, and at the same time I think there's going to be, the European Central Bank have made it fairly clear that they want a fairly robust review of the banks and member states to take place to see how stable they are, how well financed they are, and what the funding requirements are before sort of taking on a huge liability. So I think it's going to be very interesting to see how it does progress. I think it will be a major step forward, and it will. I suspect it is sorely needed. But again, I think it's one of those things that we're going to see how the politicians from 17 different nations actually, work through this whole banking union and how it's actually going to work for each individual state.
Next week is Central Bank Week once again, and NFP Friday follows, where taper talk is likely to come to the fore. How far down the road has the can been kicked, would you say? And with that in mind, what is your outlook for the euro-dollar in the lead up to 2014?
Well, I think it's what's happening in January, February is going to be quite key. Yes, we're going to have the central bank meetings, and again, I think there's the two unknowns. Are the European Central Bank going to look to reduce interest rates further, which has been sort of murmurings on. My current view would probably be not. Another one is obviously what's going to happen in the US in regards to them possibly, the Federal Reserve possibly, starting to taper back on the quantitative easing. But again, I think the view is probably not. The non-farm payroll figures, again, I think they're going to be closely watched because they're a key trigger in everyone's mind as to when the Federal Reserve will start to taper. But yeah, I think Ben Bernanke made it fairly clear earlier this week that he still has significant concerns about the U.S. economy and the robustness of the current recovery we're seeing. But again, I think we've just gone through October when we had the major problems with the debt ceiling and the lack of agreement on the U.S. budget, and as they say, the can was kicked down the road to January, February, and I think everyone's, in my mind, I think those are the key things. Christmas is always a difficult time, therefore decisions seem to be put off rather than making anything too outrageous in December. And then I think we'll see a very robust discussion between the Republicans and the Democrats on what the budget should be and what the debt ceiling should be. So I think we're not going to see anything in the short term too outrageous, but I think we're into some uncertainty early in the new year, which probably will be positive for the euro versus the US dollar. Do I see much upside from where we are for the euro at the moment? Probably not too much, but we're sort of hovered around the 136 level for the last few days. We may see it push up slightly, but again, I think once we're over this hurdle for the debt ceiling and the budget in the US, then I think we'll start to see the US begin to strengthen, and I think we'll see greater demands for tapering of the quantitative easing program, because I think everyone knows it just can't go on forever. Whether that happens in the first half of 2014 is difficult to forecast. I'll be very surprised if it didn't start in the second half of 2014, and that will be very positive for the US dollar, and we'll see it strengthen across the board once that starts.
Charles, thank you very much. Well, viewers, that's all from Charles and myself for the moment. To all those in America, the TV team, hope you've had a wonderful Thanksgiving, and for everyone else, have a great weekend. Goodbye.